Good morning, everybody. This is John Kunschner with Landmark Ventures. Thanks for joining us this morning. Got a fun virtual event here planned, so looking forward to introducing our guests. It looks like a lot of you are on and a few more will be joining, so just want to give the lay of the land. We're going to spend about an hour today talking about the current trends across Amazon and e-commerce and some of the fun things that are happening related to those markets and some of the things we've seen over the last 18 months and what we expect going forward. We are going to do about 25 or so minutes of chat with the speakers, after which we are going to open this up for questions. So those of you that are on that have some questions, you can enter those into the Q&A tab at the bottom of the page. And then when we get there, I'll be selecting some of your questions. Apologies in advance, I don't pick yours, but hopefully we'll get through most of them. But at this point, I wanted to invite our three guests to join and get on camera. So Eytan Wiener, who's the CEO of GETIDA, which is an FBA auditing and reimbursement software company. Ryan Gnesin, who's the CEO of Elevate Brands, which is a Amazon brand aggregator that just raised a nice pot of cash to go buy third-party sellers. And then Ben Faw, who's the co-founder and CEO of AdVon Commerce, a software company kind of at the intersection of content and marketing. So welcome the three of you.
Oh, cool.
Excellent. Hey, guys.
Hey,
Awesome. So just to set the stage a little bit, so obviously it's been an interesting 18 months, right? The pandemic has driven, I think the quote I've seen many times is 10 years of acceleration in 3 months. Now we're 18 months in, so that means I guess we're 40 years ahead at this point. I think, there's been a lot of trends. There's been a lot of investment in the aggregator model. There's been a lot of agencies that have taken private equity money and started to aggregate. There's been a lot of trends towards creating software around some of the fundamental skill sets, tool sets, data analytics, expense recovery, things like that. So there's a lot of great stuff that's been happening. So I'm really looking forward to kind of digging into some of this stuff with you guys because you're there day to day. Just my quick involvement. We are an investment banking advisory firm. We've worked with a variety of companies. Had the pleasure of working with Eytan in the sale of his last company. So good to have you back in your next role here. But if you guys could take a few minutes, introduce yourself, your company, and then maybe one thing that's kind of driving your, kind of either excitement levels or, concern levels around where the Amazon and e-commerce market is going. And then I'm going to turn this into kind of a collaborative discussion. So I don't know, Eytan, if you want to start, then Ryan, and Ben.
Sure. Thanks, John. Nice to see you again. Thanks for having me.
Absolutely.
And hello to the other panelists. Yeah, my name is Eytan Wiener. As John said, I used to work with a company called Quantum Networks, which was I guess, a more sophisticated Amazon reseller and private label company that we sold with John's help around a year and a half ago. I was also one of the founders of the Prosper Show, which happened a few weeks ago, which was also sold, which we hopefully will talk about this week. And now I work with a company called GETIDA, where I'm an investor and CEO, and basically work on Amazon reimbursements, data analytics, trying to help sellers save money as they grow and scale, working with aggregators, working with strategic brands, and really trying to add value. As far as Amazon trends, I guess just the sheer growth of, we'll talk about aggregators, but just even seller volume and people keeping up. I know there's a bunch of topics today, but just the sheer growth and just managing day-to-day sellers, which we do every day, is kind of intense. And there's lots of new players, there's people going in and out, and it's kind of hard to keep up with. Prosper was kind of a testament to that, and we'll talk about it, but I'm sure the other panelists have similar thoughts. That's my intense growth, like you said, 10 years and 3 months is there's so many sides to it, but that's kind of what I'm grappling with, hopefully in a good way.
Great. Ryan?
Yeah, hi everybody, Ryan Gnesin. I like to explain my accent because people always ask. So I grew up in South Africa and left there when I was 14, and then lived in Australia for about 10 years, and then lived in Switzerland and Indonesia for 8 years, and I've been in the US for about 5 years. And when I moved to the US, my previous life was commodities trading. I worked at Glencore and I ran the Southeast Asian commodities trading desk for those guys. When I moved to the US, I became kind of enthralled with the e-commerce potential, and particularly Amazon, and found it very exciting and interesting that there were all these very fragmented, I guess, mom and pop type sellers that were in many cases doing very well, but there was a noticeable kind of lack of sophisticated capital at the time in 2016, when I went to some of these conferences, there was just kind of a noticeable lack of interest from the big investment banks and M&A guys and private equity world. And so I thought this would be a huge opportunity and a great trend to ride. I set up a company and started selling on Amazon in 2016, tried a bunch of different models over the years, which included, launching my own private label products, doing reselling of branded footwear and apparel like Adidas and Reebok and Nike, and always took a kind of analytical database approach to selling on Amazon. And that's the great thing about Amazon is they provide so much rich data where you could see, for example, on a pair of shoes, which size, which color was doing the best, what the sales volatility looked like, what the pricing volatility looked like over time. So there was all this really rich information, and we built a pretty nice reselling business over the first couple of years. And then in 2019, it occurred to me that the real opportunity here was going to be to acquire some of these third-party sellers. You couldn't do that earlier. You couldn't do that in 2016, 17, 18, because Amazon's terms of service precluded you from actually buying an account and transferring it into your name. And there was all these rules about what you could and couldn't do. And those rules kind of started to relax in 2018. And so by 2019, we started then acquiring some businesses. We picked up steam in 2020. And then obviously, with the pandemic, things really accelerated, and Anchor IPO'd in China, close to $10 billion market cap. And so, those who believe that, you couldn't build a real brand on Amazon, I think that myth was dispelled, let's say, with Anchor, amongst some of the other guys out there. And so we then picked up steam and we closed our Series A at the end of just early 2021. We've closed our Series B about 2 weeks ago. We raised $250 million, combination of debt and equity. And we just have a lot of momentum now, and about 120 people on the team. We've closed about 25 businesses and about another 10 under LOI in underwriting. So we have a bunch of momentum there, and we're just in general, we're very excited about the space. We're seeing a lot of opportunity there. We are, of course, on the other hand, seeing margins being compressed with increase in supply chain costs across freight, warehousing, logistics, etc. So that's us.
Great, thank you. Ben?
Yeah, Ben Fall here, co-founder at AdVon, and quick backstory is was not talented enough to trade anything at Glencore or start some of the neat businesses that Eytan did, but was fortunate enough to do some time at Tesla Motors, LinkedIn, and then had co-founded, and then we sold Best Reviews in 2018, and then we actually sold the remainder in 2020, first to Tribune and then to a company called Nexstar that owns a lot of different TV assets, and got real familiar with kind of one side of the Amazon and e-com ecosystem, which is kind of publications and the traffic that they drive to the different e-tailers, the marketplaces, et cetera, and how that ends up playing a factor. What we've done with AdVon is really tried to focus on providing a suite of software and services to different publications to help them in that pursuit of growing those commerce revenue streams. And then along the way, we've found there's opportunities to help, particularly the e-tailers, where I think we can talk a little bit about later maybe, but there's a couple trends we see. One is a trend of getting traffic to your website. Some of y'all may have seen, Amazon themselves have an additional bonus they've recently rolled out to kind of promote more traffic coming to Amazon.com. And so we think that is kind of one factor in what we think of as kind of the traffic and marketing funnel. The next would be, once the traffic hits the website of Amazon or whatever it might be, what are you doing to retain that traffic, promote more search to happen on the platform, and convert it? Amazon, and we helped with this at Best Reviews, roll out the on-site publisher program, which you see as an editorial recommendation module in some of the Amazon search engine results pages. We think content like that, which is basically trusted editorial third-party content in the e-commerce marketplace, is perhaps a very early innings trend that we'll see a lot more of to do things like grow search, grow engagement, increase conversion rates, create more reasons for people to stay on the marketplace rather than conduct searches on Google and just depart the experience. So I'm really excited to be on here, and thanks for hosting, John.
Great. Thank you, guys, and welcome. Thanks for taking a few minutes of your time today. Just a reminder to the new folks who've joined, we're going to do 20 or so minutes of chat here, and then do want to open it up for questions. So there is a Q&A tab. If you have anything you can add as you go through it and something comes to mind, we'll pick through those at the end. Let me key in on one. I think it was mentioned, supply chain, and some of the elements around Amazon, who kind of seems to love to change the game every once in a while and create new rules or restrictions. And most recently, we've got clients that are suffering through the stock restrictions and fulfillment space issues. But there's others, right? There's examples kind of every couple months of things that change and kind of throw a wrench into certain people's business models. I'd love to get a sense how you guys manage it. What are you seeing right now? Is it a fundamental change? Is it just another kind of thing we work through and we continue on our merry way? Any three of you can answer, but I'm just curious how you manage within that ecosystem where there's such a an overriding force that can change the game at any moment.
Yeah, I mean, I can comment on this. Yeah, supply chains are an absolute mess. We've got a really experienced supply chain guy who leads our team, Muzzy Palmieri, who pretty much headed Lenovo's supply chain. So he's been a veteran of the game. He's never seen costs so high, and it's across. We've seen on average, for example, we're seeing costs, for freight have increased by roughly 35% this year, and we expect that will continue to increase through December. Supplier production lead times, we've seen a 25 to 50% increase there. So that doesn't help. Supplier unit cost prices are increasing as well. So we're seeing on average 15% increase across sort of 13 segments of categories that we work in. So, everywhere you look, we're being squeezed, and we just don't think it's gonna improve anytime soon. It's a combination of the pandemic. It's a combination of floods in Henan province in China, Western Europe. It's a shortage of shipping containers. So, it's quite difficult at the moment. A 40-foot container, which previously, like if you went back 12 months, was costing us $5,000, is now costing us about $19,000 for a 40-foot container. So it's pretty dramatic and very difficult to go and lock in long-term freight going forward now, because all the providers are, whereas a year and 2 years ago, they were under a lot of pressure. They're now trying to make bank now and take advantage. So very difficult to get any kind of discount in the market today, unless you've already locked those in, a year ago. So yeah, so in general, it's a challenge. It is, as I said during the introduction, that was giving some compression to our margins, and there's not much you can do about it other than to just operate really efficiently. You just have to work with your suppliers, and as we get bigger, that obviously gives us some additional clout. But at best, you can maybe try and keep your costs from increasing. There's no way, I think, at the moment to even reduce costing, which is one of the theses of our business model. But it's a short-term issue. We think within 6 to 12 months, some of these congestion issues will start to ease. But we just have to make up for that with doing a better job across other parts of the business. From creative content to advertising, other whatever else it may be. So that is, yeah, those are some of the challenges we're facing at the moment.
I just wanted to add in, Ryan, on the second level, even when the world maybe normalizes, you have the Amazon restriction level, right? So I spoke about this a bunch of times, and it's kind of all over now, but most people don't understand it. I don't fully understand it. Sellers don't understand it. Amazon changes the limits of what you could send to FBA and fulfillment kind of every month for Prime Day, for season. It's really funky. So just high level for people who may not understand, used to be able to kind of send an unlimited amount as long as your score of turn was at a certain level. But now, based on the fact that they don't have enough fulfillment centers, and essentially they want to treat FBA fulfillment by Amazon as really what it should be, like a shelf where it turns, not long-term storage. So supposedly they're coming up with some storage model as well. The problem is a lot of private label companies, as Ryan knows, like they ship stuff straight from China into FBA. So they ship containers at a time, and sometimes more. That used to be fine. Now you're not allowed to. So you have to all of a sudden pivot, which happened 5-6 months ago and before, to actually land it here, which costs a lot more, which involves prep, sophistication, integration, and all of a sudden everyone has to just change the game. So it's more cost. In addition to the fact that the containers cost more, you have to land it, which costs more, and then you have to forecast into Amazon. So aside from not knowing what's going to come from China because of the costs and because of the backup, because of the world affairs, even when you get it, you have a much, you could argue, more complicated forecasting model of what to send to Amazon, which unfortunately leads to lower sales, lower ranking, and it screws it up. So there's so many challenges along the way. Even though there's so much growth, there's so many challenges that a lot of people, you know, kind of throw their hands up. A lot of clients call us like, what do I do? How do I work with, you know, ASIN and SKU limitations? And there's really no one right answer. It's extremely problematic.
Yeah, I can also just add to that. That's absolutely right. It used to be the case that Amazon gave you an inventory limit on the SKU level, like what Amazon calls the ASIN level, right? So for a given product, you had like a 200 unit limit. Well, now they've done it at the account level. So it's made it even more challenging. So you can decide which SKUs you want to send in, but the limits are at the account level. I think it's something like at 1,000 units or something at the account level. So yeah, it's just making it more difficult, and they seem to change it without notice, and they're changing it all the time. So just quite tricky and difficult to plan for that, as Eytan said.
Yeah. So with that all, I guess there's debate about when and actually if and when it would go back to more normalized. I think what I'm hearing is it requires a lot more data-driven thought and planning and kind of, you know, differentiation in your model. You can't just do it at, you know, at scale and expect FBA to solve your problems anymore. So it will be interesting. Ben, anything on the software side in terms of, I know you're more on the content, but as people are managing through, you know, the intelligence that software can drive, is it something that this creates an opportunity for you?
Yeah, it's a great question, John. I think it's, you know, the struggles that that you're getting at are certainly present from a technological perspective, and I think there will continue to be innovation there. But understanding, and you know, Amazon's invested in some great API solutions. Their product API in particular can be very helpful to publications and various players in the ecosystem. But it feels like there's still opportunity. To the points they raised, for anyone who's curating content to better understand what's actually in stock and what that forecast is. Because what's not helpful, if I'm a publication or really any player in the ecosystem, you don't want to be pushing traffic or users and consumers to a product detail page and yet it'd be out of stock. And so that's one of the big nuances where there's continued investment happening. And it's, I would say, a relatively unsolved problem from a holistic perspective, if we think of any of the major platforms. And you know, ironically, the everything store aspect of Amazon almost makes it trickier than a place like perhaps Best Buy, where there's more curation and thought that goes into maybe what sits on a shelf and how that shelf is managed and curated. The same could arguably be true for Target.
Yep, interesting. I mean, there's a lot of different business models, and I think just given, you know, Ryan, you just raised a bunch of money. There's been a ton of, I don't know how many there are at this point, aggregators, you know, probably close to 100. The trend of acquiring FBA sellers, creating a business around it, you know, give us a little bit, and sorry to key on you, you know, what is the secret sauce to be successful there? To some extent, because, you know, the level, you know, as you're working specifically within Amazon, some of these challenges arise. You know, how do you pick the right brands? How do you know, once you have the brands, how do you scale them? And how do you use folks like Eytan and Ben to facilitate your business to be successful? And so I'll ask you first, but then I want to hear from Eytan and Ben as well. It's from their perspective, because their clients are now probably a lot of these companies that own these brands.
Yeah, there was a few different things in there.
Yeah, sorry.
No, that's okay. I'll try to answer all of them. So, you know, the reality is there isn't a huge amount of what I would call secret sauce here as it relates to buying a business. I mean, guys have different ways of looking at it. There's a lot of data. And in terms of, so let's start with buying businesses. There's a lot of data points you can look at for buying businesses. We've done it now, you know, many times, and I mean, for every 100 businesses we look at, maybe we buy one. I mean, so we're very discerning as it relates to the businesses we buy. And particularly as you came out of the pandemic, where a lot of businesses had a COVID kick, we were super careful to avoid buying, for example, a skipping rope company, right? Or a home exercise, whatever it may be. There's just a lot of factors there. The key is really in the execution. The key is really just collecting the data and then using that to generate, really strong insights, and then acting on those insights, which is, easier said than done. And as it relates to operating these companies, I mean, we have something like a 500-point checklist that we look at for every business. And how you prioritize that list and how you actually go about implementing some of those things is the difference that makes the difference, right? Because I could say I'm going to optimize my hero image, for example, but there's a spectrum there for how you optimize it. One guy optimizes it and gets a 6 out of 10. Another person optimizes it and gets a 9 out of 10. And the same thing can be said for advertising. The same thing can be said for how you optimize your supply chain. So, it's not just what you do, it's how you do it. And, I mean, it's maybe that's not a satisfactory answer, but we really see this game being won or lost in the guys who are really great operators, because, one group maybe can grow the business 20%, another group can grow at 120%. They may be doing more or less the same things, just one group is doing it more efficiently, faster, better than the other group, and getting your team aligned to manage all of those SKUs is somewhat complex. But if you have the right system and the right sort of North Star and the right playbook, you can generate a real outsized advantage. So maybe that answer is a little vague, but really we see ourselves as really good operators, and we think that at the end of the day, that's the thing that's going to make the difference is how you can grow these brands post-acquisition. Because the truth is, anybody can go and buy an Amazon business. It's really not difficult. Pay the number. It used to be the case that sellers were relying heavily on an earn-out component. Most of the deals we still do have an earn-out component, but the earn-out element has shrunk somewhat, and sellers tend to be more focused on the upfront component. Just because there are so many aggregators, they don't know which of the guys who are going to be able to grow the brand post-acquisition or not. So they tend to say, well, I don't know, I'll just take more money up front. And when we have sellers who spend enough time with us, they tend to say, okay, actually, great. Yeah, I would like to actually take more of an earn-out component, because I do believe you guys and you have the track record and whatnot. So there's a bunch of things there. Yeah, using software is important, and having the right providers. We use, as example, we've been using GETIDA to help with some of our software, some of our reimbursements. And yeah, I mean, there's a bunch of providers out there. There's an element to building stuff yourself. In many cases, a lot of the stuff has already been built, and you can customize your ERP as an example without having to build it ground up. So yeah, I mean, and what's interesting is just, you have to constantly be at the cutting edge of the stuff, because there's always a new trick, there's always a new software, there's always something new that you can use. And so we're very focused on staying very entrenched in the community and making sure we're always implementing best practice.
That's great. Eytan, Ben, curious your thoughts. How has the aggregator wave kind of impacted your sales model and kind of how you target customers?
Yeah, I have like a few themes here that I usually speak about aggregators. I know, John, when we sold our business, like selling an Amazon business was like a little tough, right? We had a lot of inventory, and as you know, that was like, people are like, I don't want to buy inventory. Who does that? And maybe we should have waited a little more, but that's life. Now, like, it's the hottest thing ever, and it baffles me that people read, on the Wall Street Journal front page about FBA and like, oh, and now I know what you did your whole life, and obviously that's what Ryan's living in. I have two themes about this crazy craze. One is, I think there's so much money and activity that, like, it's wonderful, but it's a little a bit of a fad. I think Ryan's team is unique because they were sellers, as he mentioned, and if you're not a seller, then you don't necessarily know the game. So you could be a wonderful aggregator and hire people from Target and Amazon, but if you've never been through selling and being suspended and all the ASIN restrictions, it's very hard to be successful despite who you hire, number one. Number two, as he actually mentioned on the earnout side, I think it's very important to try to roll equity or have founders involved, because you could buy many brands for multiples of EBITDA all day and raise debt, and hopefully it works out, or you cash out, or you go public. But if you could buy, and it's hard to do chemistry wise, obviously with so many people, I'm sure Ryan knows better than me, but if you could buy a creator, or you could acqui-hire and get someone involved who creates 10 or 15 brands, that's much cheaper, so to speak, than buying 15 brands. It's hard, but I think that's just so much smarter. And I think those who do that, and those who have Amazon experience, are bound to succeed. I think some of the other like finance people that come into the space because it's hot and they're like, oh, I'm going to buy Amazon brands too. It's really, really hard to run even a basic Amazon business because of all the supply chain things and like hundreds of other elements we're not talking about. And I think people don't realize that. They just see it as like, oh, this is the new, Robinhood, Bitcoin. Like, it's really, really hard, even though it sounds simple. And I think that's a big fallacy. It doesn't mean it's not going to succeed. I just think a lot of these smaller or up and coming aggregators really need to get serious about these concepts, or else it's not sustainable, in my opinion. Having said that, they're wonderful aggregators, and we work with a lot of them at scale. We're able to audit a lot of their clients. We have a product where we're able to audit clients beforehand to see some of the potential money they're missing out on based on reimbursements and data, which is cool because they have that little leverage to see what's missing. And after the fact, we're able to manage hundreds of accounts of aggregators at one time to save them a lot of money and usually a lower margin kind of business model. So those are my thoughts on the space.
Awesome. Yeah, the only thing, I think these guys have got infinitely more knowledge in this space than I'll ever claim to get close to. But I would just say that I do think there's something to the fact that there was concerns in some cases when you think about publications and editorial content being curated. If it's not a one-piece sort of situation. And I think if you think of one big trend, I think it's the kind of professionalization, credibility, and trust given to 3P. That's a major trend. And when I think forward a few years, I just don't think there'll be concerns from the vast majority of editorial and publication content when it comes to like which sort of products you're writing about, recommending, et cetera, because there's not this big demarcation anymore. You can see a higher quality, more professional, better managed product now, because to the big picture way I think about it, whether it's Ryan or Ryan is digital first, right? All of his instincts and infrastructure are built around these e-commerce platforms, marketplaces, et cetera, versus the legacy, whoever they might be, mega brand from a long time ago. They've built all their infrastructure for brick and mortar. So it feels to me like a big innovation turn, probably in terms of digital first. And I think to Eytan's point, there's more software probably coming to this space, because there's just no way, Ryan's team has to make choices, build by partner with certain things. And so my sense is we'll continue to see a lot of innovation in this space. And I think that probably bodes well for a number of players in it today, and then those who will probably join in the future as well.
That's great. Thanks, Ben. Just a reminder, if anybody has, as we kind of get in the second half, if you have questions from the audience, feel free to post them, and we'll keep going if there aren't any. But if you have anything burning, happy to loop you into the make it more engaging. Ben, I want to key in on kind of your world a little bit more, which is around kind of the importance of content and curated content and editorial, and how do you kind of differentiate in this sea of products that almost don't even need a brand anymore, right? And kind of what you see as the keys to success, within Amazon, and then maybe even outside Amazon, like in the .com world.
Yeah, no, that's a great question, John. I think, there's a few trends worth noting, and honestly, they're probably trends that aren't foreign to other people on this panel. On a relative basis, Amazon's losing market share, whether it be Best Buy, Walmart, Shopify, however you want to think about it, in the US market in particular. And so I think in the past, you saw a lot of publications, and Best Reviews was one of them, that was very dependent on Amazon for commerce revenue streams. And I think that trend is really kind of heading the other direction for a bunch of reasons people are familiar with. Amazon decreased a lot of rate cards. It's very public. Those sorts of signals, I think, to publications are sending their traffic, their resources to other platforms and other marketplaces. And so I think that's one factor. I think another factor is, Google's continuing to be a challenging environment to win in as algorithm updates kind of shake up the organic search. So you have publications thinking a lot about how do we diversify from Google? So are we getting traffic from a variety of different sources? And then are we pushing it to a variety of different partners for monetization? So I think we're going to continue to see those trends accelerate. And then I think there's a real interesting trend around where is the transaction happening and who owns that customer data. And I don't have the answers here yet, but you can see some of this happening, whether it be a platform like Shop Bonsai that's trying to bring transactions into the publication's own native environment. So you can literally, as an embedded feature where you can make a purchase right there on, for instance, the New York Times or the Wall Street Journal. I don't think either of those are actually running that unit, but that's an interesting evolving, I think, issue within the industry to where eventually you're kind of, am I on a publication site or am I actually in a retail site? I think the lines start to become potentially blurred for certain users at certain times. And I think that's a very interesting trend. I don't know exactly where it concludes, but I do think editorial content is going to have a bigger seat at the table over the next few years as consumers, I think, lose relative trust in user-generated content for all the reasons. We see an article every few days about either Amazon pulling someone down or reviews from consumers that may not be as trustworthy as they once were, or maybe as consumers thought they were. And so I think that's another meaningful trend that's probably in the early innings still.
That's great. Interesting. You mentioned multi-marketplace, and maybe I know some folks here are a little more Amazon centric. I'm curious opinions about, I guess 6 months ago you asked the question, where else are you focused? And you're like, well, we kind of care maybe Walmart, but it's not big enough, and the rest I don't. There's just not enough traffic for me to care. Is it changing dramatically here? Are you starting to see an importance of brands having to be on all 5, 6, 7 marketplaces to be successful? Or is this still an Amazon-centric market for the next 12, 18 months? Just curious opinions. Eytan, you unmuted.
Yeah. I've always tried really hard to diversify channels, and also back, similar to when we sold, right? Everyone's like, oh, you're only on Amazon, it's a risk. Now it's like, if you're not on Amazon, if you're not only on Amazon, it's not sexy. In reality, eBay, Walmart, or whatever combined is 4 or 5%. And even to get that 4 or 5% or 6% or maximum 10, you have to work much, much harder in a much more unsophisticated platform. That's super painful. So you need to diversify, and Walmart's a very, very, very distant second. So I think it's important. Obviously, Shopify is a different model, and direct to consumer and having a website is a different strategy, which is super important. But Amazon's hands above, for better or worse. It's not even close. So again, everyone should diversify within reason, and try to navigate these portals that are really challenging because they're just way behind. And obviously, a website is important, but it's just, there's so much Amazon volume that it's like, as I said before, it's very intense, and just managing that is more than enough, for better or worse. Yeah.
Ryan, I know your answer that you're pretty Amazon centric, but I guess, is there a view that other marketplaces matter to you in the future?
Yeah, so I mean, I would echo what Eytan mentioned there. We do sell on some of the other marketplaces in a very small way, but we always ask ourselves, is the juice worth the squeeze? Right. And most of the time, the answer to that is no. We'll be there. We're very happy to support the Walmarts and eBays, and Targets once it's worth it. I have heard anecdotally that some people get a lot of success, right? If you were one of the early guys in Target and you're a preferred seller there. I mean, there are some guys that do have outsized advantages there, but for the most part, you know, we like to say, one of the expressions we like to say internally is we can do anything we want, we just can't do everything. So we want to make sure we're world-class at Amazon. And if we feel like we've really optimized everything we can on Amazon, sure, then it makes sense to really focus our efforts on Walmart and eBay. But we feel like it's, you know, it may get there over time. And I say may because the Amazon flywheel is so powerful, right? You know, because they've lost money for years, spending billions and billions of dollars on resources and optimizing the third-party platform such that it's so easy and efficient for sellers like us to be selling there. And that flywheel brings more sellers, which brings more customers, and the more customers brings more sellers, and which brings more variety and lower prices and more customers again. So that flywheel is spinning very efficiently and far faster than, even if Walmart and eBay are maybe gaining market share relatively, the absolute dollar terms are still very, very low relatively, and we just don't think they're going to catch up anytime soon. So yeah, we tend to focus for the most part still on Amazon. And by the way, there's, you know, there's Amazon, but there's Amazon US, and then there's Amazon Europe, and then there's Amazon Japan and UAE and etc.
Interesting question from the audience that relates to, you know, we talked a little bit about aggregators and how crowded it is, the concept of direct to consumer, right? And not being on Amazon and creating a branded experience and leveraging .com and other, you know, do you guys believe that's a winning strategy for some of these brands to almost avoid Amazon?
You know, I mean, I'll give you our perspective. We, the way we look at our portfolio is that we have kind of 3 buckets of investments. The top tier bucket is one where, and that might be 10 or so % of our portfolio, where we believe we can really grow these into major brands, right? Where we could buy it and then 10 or 20 or 30x the size of the business. And that strategy includes building out the D2C model for those brands. But for the vast majority of our portfolio, we're not very aggressively going and promoting it. You know, some products, for example, we have a vice jaw. We're one of the leading sellers of vice jaws on Amazon. So it's a little thing that you put on a clamp to protect, let's say, your golf club or your gun if you're polishing it, for example. And that's never going to be an Instagram phenomenon, that product, right? I mean, we'd have to be super creative to figure out how to do that. But that's okay. It's the leading seller in its category on Amazon. It does great. We've grown it dramatically since we bought it, and that will stay there. For other businesses, yeah, you know, we're one of the leading sellers of ceremonial matcha on Amazon, which we think we can blow that. We have a patented pillow that you use, for example, if you just had Botox surgery and it keeps your neck in place. It's patented design. That's product we think has massive upside. So, you know, for certain brands, yes, that's the case. Now, if you're looking at it from the other perspective, if you buy a D2C brand and should you take it to Amazon, you know, to me, I don't see that it necessarily dilutes your brand by taking it to Amazon, as long as you don't, because Amazon now has the storefront and you can make it look beautiful. As long as you're not discounting it heavily on Amazon versus D2C, then I don't see how it would diminish from the brand. So I don't see any reason not to at least give it a go. Having said that, it's often the case that products that sell well on Amazon don't do well off Amazon and vice versa. That's just the nature of it, right? You could have, you know, oftentimes one of the strategies people use is, well, you take a product that's doing well on Amazon, but if you want that product to do well on Instagram, for example, you need to repackage it, for example, because conversion on Amazon might be 20%, conversion on Instagram might be 2%. So you're going to have to sell it probably for a higher price on Instagram, which means you're going to have to do something to make it stand out and have, you know, let's say more premium packaging. So yeah, so it doesn't always translate.
Interesting. Eytan, I want to give you a chance. You know, Prosper Show was mentioned earlier, and you as a brainchild of it. It's an interesting dynamic in that it's become, you know, from a lot of people I speak to, kind of the key business development opportunity of the year, both finding brands, you know, engaging with brands. Want to give you a chance, one, to, you know, kind of voice anything about this year's show that was unique or interesting, or changing going forward? And I welcome Ben and Ryan to comment as well. I don't know if you all went, but I did not go, but I've heard a lot about through anecdotal stories.
Yeah, it was awesome. When we started, I would tell the people or that I met, and you like it. It was a few hundred sellers, and I had to beg like 30 vendors to come to spend like $4,000 for a booth, and it was kind of like it was still wonderful the first year we did in Salt Lake, and there was no infrastructure or community around Amazon. Fast forward 5 years, and you have like 120 booths, 2,000 plus attendees, aggregators, investors, bankers. It's like totally different world, and it's really nice to see. It's kind of amazing. But additionally, as I said, there's all these groups like Ryan knows, like I saw him at some of these parties. There was like 27 parties and after parties and breakfast and dinners. It was like kind of like, John, what I see you at CES, and there's so many events, it was like intense. We didn't even have barely a show, and now it's a whole ecosystem, which just shows you that there not only is the space growing like tremendously, but the pockets around it, the Facebook groups, the mastermind groups, courses, lessons, aggregators, like it was off the hook in a good way. And the quality of the attendees, because I've been there for the last 4 or 5 years, like was just a different level. Every seller I spoke to was multi-million or an aggregator or like, serious investment or, like tier 1 private equity. It was like really refreshing. Obviously you have beginners and you have others, but in the beginning, in the earlier shows, it was I guess quite primitive in that sense. But since the market's matured, like we said, so fast, and this money has come into the aggregator space, it was just, and I guess the culmination of people also wanting to get out of their house or go to Vegas or whatever you call it, like cabin fever. It was really wonderful. So those are my thoughts. Maybe Ryan could add in.
Yeah. Listen, I agree with you. When we went a few years ago, it was like this very nascent Wild West kind of space. I remember meeting a seller a few years ago when I went, who was doing like $30 million in sales. And I was getting ready to kiss the ring. It was like, wow, this guy, and this is an enormous business, right? And now, I mean, like we met $300 million sellers when we were down there, and people would come up to our booth and you'd have a casual conversation with them and how's the business? Yeah, well, I'm only doing 45 or $50 million in revenue. I want to double it. It's just, it's surprising how many mega sellers there are out there. It's just very exciting. It was, as Eytan said, it was a wonderful experience. It felt, these conferences, last conference, I don't know, we were in bed maybe by like 11 p.m. or something. I mean, here we just didn't sleep this time. There was just so many good people to meet and so much cool stuff happening. And you can really feel like it really started to come into its own. And I think in years to come, that's only gonna get better and better. The platform is going to become more professional. The various parties at these conferences, it's exciting and it's a great space to be in. And you could really feel the energy in the room was palpable. So it's certainly and I don't see any reason why that wouldn't continue to be the case for many years to come, right? I mean, Amazon's not going anywhere. The third-party marketplace was $300 billion last year, which was 50% up from the year prior, and we think it's going to get to $500 billion, $500 billion within the next probably 4 or 5 years. So there's just an enormous amount of opportunity that comes with a marketplace that size. I mean, the Amazon third-party marketplace is bigger than the economy of South Africa, right? South Africa is like 42 in the world for economy, and Amazon third-party is like 41 if you were to count it as a countries. So yeah, it's exciting, and we got a lot out of being at the conference.
Great. Ben, any add, or we can move to the next topic? Nothing. Okay. Couple themes in the question. So one that's interesting is this kind of rise of Chinese third-party sellers and the impact it's having on either the strategies or the importance of data, or to your point, Ben, the importance of differentiated content. Thoughts about how the increased competition is going to impact either the aggregator model in general, or kind of how people can differentiate within Amazon. I don't know if anybody wants to volunteer.
Yeah, I mean, I can give you my thoughts. Yes, it's a thing. There was something like, there was a stat that came out a few months ago where there was 1 million new third-party sellers that come every year. And in Q1, 75% of new sellers were Chinese.
Yep.
So, I mean, that is a trend that is certainly not to be ignored. And the Chinese sellers are very aggressive and they have their own way of doing things, right? There tends to be there tends to be quite a lot of black hat activity that comes out of China. Amazon's getting better at clamping down on that stuff, like constantly getting better at all that kind of stuff. And there was some statistic that there's some statistic from one of the reports where they shut down something like there was 10 billion suspected listings that were blocked from the platform. There were 6 million attempts to create a seller account that was suspected of being involved in counterfeit, which Amazon clamped down on. So, so I mean, there is still some counterfeit stuff out there, but Amazon's getting really good at protecting it. So yeah, I mean, but in general, one of the trends is that, yeah, some of these Chinese sellers have a cost advantage because many times it is the factory. Now, the challenge is selling successfully on Amazon. Price is obviously important, but it's not the only thing. So if that's all that they're good at, and it's very hard to be really good at everything, right? It's like I said before, you can do anything, you just can't do everything well. If they're going to be a world-class manufacturing facility, are they also going to be world-class at selling on Amazon? It's difficult to do both really well. Now they can outsource to agencies, but then now their costs just increase again. So there's, but in general, what we have found is that we're able to, even without being the most cost-effective provider out there, oftentimes you're able to outperform. In fact, we try to be the most expensive seller in our category, right? But we compensate for that by adding more value and innovating the product and maybe having a patent, and really enhancing the creative and content and getting a cost advantage on the freight side if possible. So there's a bunch of stuff we do there. One of the things that I think is a mistake to think that you could just buy one of these businesses and then just leave it and hope that it does well. That's just not the case. In our experience, when you buy a business, you have to immediately optimize it, and we have our playbook, but you also have to be innovating and adding new SKUs to it, whether it's size or color variations or adding new listings under the same brand, and just constantly be innovating, because that to me is the key to kind of staying ahead and having a growing business. Yeah.
Yeah, from like an editorial side, John, and from a content curation perspective, it's a tricky situation, because I think there's an elevated level of concern around the quality of the product when you think it's from a Chinese seller that's clearly there's the anchors of the world that have just hyper credibility, and then there's many players that it's a lot less clear, and I think there's also some suspicion when you see volume and star rating and so forth in their user generated reviews. So I think those are touch points and data points that are out there. And then I think there are editorial publications that just generally speaking don't want to write reviews content on those types of products, because there's just an uncertainty where you don't maybe want your editorial brand associated with a brand that's maybe not as credible. So I think it's to Ryan's point, it's a good thing for the ecosystem, and from what I can tell, to have Amazon, put a little bit of attention at least into kind of cleaning up maybe a more questionable corner of the ecosystem.
Very well, if you will, John, just to connect both points together. So Ryan mentioned black hat tactics, and Ben mentioned editorial. So one of the black hat tactics is reviews, buying reviews or farming reviews or whatever it is to get reviews that are not legitimate. So Amazon has a funky way of cracking down on that, and not based on time. But in addition to what Ryan mentioned about Amazon blocking new seller ads to the platform as far as sellers, and also counterfeit, which is a separate kind of discussion, quality of product. As Ben knows, they also knocked out 1.5 billion of 7 or 8 strategic large Chinese sellers that most people know, because you probably have the products, because I have these car chargers and stuff from these dudes. I like to buy all these chargers and cases and power banks, even though I never use them. But they knocked out billions. They're not afraid to knock out $1 billion Chinese seller in a second because it's really like pennies to them, and they're into the quality. So even though there is a huge growth in Chinese sellers, and it's challenging, right? Because they're the factory themselves. To Ryan's point, they have the costs, and they could just copy you, or you can go to them and they could copy what you told them, and they may not care about the patent or whatever it may be. The quality of their listings and the editorial is challenging. And as Ryan said, if you do a really good job to sell and you're a US seller, usually that comes out, but it does become more challenging when you have all of these kind of hurdles to navigate with content, with quality, with supply chain. And the Chinese are very good at a lot of those things, not all. And even the ones who are good at all, like these big companies who everyone thought were infallible, all got knocked off, and they're still not on. And that's actually a very big statement from Amazon, which I applaud. I guess we'll see how it lasts.
Interesting. We're getting close to I don't want to go too far down a rabbit hole. I'm just, from my perspective, there's a really interesting dynamic around this kind of concept of consumer digital convenience, and the fact that we've all now, the expectations for, the fact that I can order something and get it immediately is kind of the, you look at your children and they don't even think about going to the store anymore, right? They have it. So you've seen grocery delivery absolutely blow up. There's a question about GoPuff, but Amazon's in that business too, DoorDash, others. Any quick thoughts about how you need to deal with that consumer expectation, either within Amazon or the fact that Amazon's not enough now? There's everything that they want needs to be delivered. Is there a broader strategy that you guys are thinking about dealing with that new consumer expectation as you think about brands, as you think about serving your customer base?
I'll comment on that. For the most part, I'm happy to, and part of the reason we've pegged ourselves, let's say, to Amazon's cart, right, or horse, is we just see them continue to innovate very aggressively. And I've heard, I've listened to probably every public interview Bezos has ever said, because I just think his psychology and the way he thinks about business is just remarkable. And what he has continued to say is no customer is ever going to say that I want more expensive prices. No customer is ever going to say that I just wish the product would arrive in 5 days instead of 3 days. There are certain, I wish the customer service was not as good. There's just there are certain things that will just, that customers are always going to expect, and faster delivery times is one of them. And Amazon is obviously investing very aggressively in that area. They tried the Amazon Prime Now. I don't think that's as big a push as it used to be. With the 1 day delivery, or it was even like a few hours delivery.
Few hours, yeah.
But they're continuing obviously to invest in logistics. And so from my expectation, no one in the world is better placed to innovate and improve in that area than Amazon. So I'm very happy to keep selling on the Amazon platform, because I think they're gonna help satiate that customer need for faster delivery times, more likely than anyone else. So that would be my answer there. I certainly don't see how we could. It would be way too cost prohibitive for us to try and exceed the Amazon 2-day Prime kind of delivery window. So I'm happy to, and if Amazon can get it down to 18 months, or to 18 hours, or 1 day, great. That'll be beneficial to us.
Yeah. Ben, Eytan, thoughts?
I think. Yeah, I agree with Ryan, meaning you could, use their horse, or whatever you called it, engine. I think it's more, and that's kind of strategic for sellers to get stuff quickest to customers. Like, you can't build your own supply chain even close to theirs if you had trillions of dollars. But I guess it's more of a lesson for the Targets and Walmarts. Like, I think Target bought some delivery company or post, I don't know, you know more than me on this stuff, to get instant delivery. So I think the Walmarts, Walmart having all their, we spoke about Walmart before as a platform. If Walmart will turn their stores into fulfillment centers, they'll have a bigger they'll have a bigger footprint than Amazon, with a bigger reach to more people. Easier said than done. So they have to invest more in, the same day delivery, or, shopping, what is it called? Parking lot delivery. It's like Target's doing.
Yeah.
Curbside, sorry. Yeah. All these retailers have to just do that really quickly. Then they kind of have a fighting chance, because it makes it, to your point, instantaneous. Yeah, my kids want things like yesterday. and they don't understand what it is to wait, unfortunately, for items, which is kind of crazy, but I guess we've also become like that. If the other retailers or sellers want to have that, aside from Amazon, to Ryan's point, it doesn't really exist in such a glorified way, and it needs to catch up, or Amazon will just have a bigger, lead in the space.
Yep. Great. Well, I think we're in the last 2 minutes here. Any advice you guys would give? I had a few questions around, mom and pop players, struggling to get on Amazon. How do you prevent the race to the bottom? Any words of wisdom working within this ecosystem? Maybe it's hire you guys to help them, but just curious, anything you kind of words of parting wisdom here from three of you.
I have one quick piece, and it's really just coming back to something Ryan and Eytan mentioned, and that's the kind of continuous innovation. I think that no work is done. And if one thing we learned from Amazon is this idea of it's still day one, we have a lot more ahead than behind. I believe that concept's relevant to every business today. The ecosystems will shift, but if you obsess over the customer and creating a great experience for them, it feels like that's a really, really solid true north.
Great. Eytan, Ryan, any parting wisdom?
I'm not sure I have any parting wisdom. I 100% agree with Ben. It's early days for e-commerce. It's certainly Amazon continues to innovate at a pace that startles most people for a company their size. So we just think it's a very exciting place. And hopefully once these supply chain issues settle themselves out, there's obviously margins from our perspective will improve, but yeah, I just think it's an exciting place to be. And there's so many different ways you can take advantage of the Amazon ecosystem, right? So yeah.
Excellent. Good. We are at time. I want to thank the three of you for joining today. It's an interesting conversation. For those that are still on, we will circulate an email with the contact information. So if you have further questions or want to reach out, I'm sure they'd love to hear from you. But great stuff, guys. Good luck in the remainder of the year. Enjoy the rest of the summer, and look forward to working with you guys in various ways going forward. So have a great rest of your day.
Thanks very much, everybody.
Take
care.
care.